Every single time insiders buy their own destroyed stock after earnings, history says pay attention. And right now, it just happened at 7 different companies. Double-digit drops, and then boom. The CEO opens his brokerage account and buys $500,000 of his own shares. These the smartest people in the room with access to information you and I will never see, telling you exactly what they think comes next. Insiders might sell for any number of reasons, but they only buy for one. But important to note, it doesn't guarantee a stock will go up, and it should never be the only reason to invest. But it can be a very powerful starting point for research. So today I will back the insiders buys with real fundamentals and why insider activity may be worth paying attention to. Let's dive straight into the first stock that insiders bought, and that one is SOFI Technology. The CEO Anthony Noto bought on May the 11th and 8th $500,000 worth of shares at a price of $15.80. The stock trades now at exactly the same price, and most importantly, the CEO bought $1.5 million worth of shares in March at even a higher price, which was $18. That's a vote of confidence from the CEO who knows this business better than anyone. And honestly, I would do the same. They are trading at a PE ratio of 35, which is fully deserved because their revenues are forecasted to surge by 30% in the upcoming 12 months, and their EPS is forecasted to surge by a whopping 40%. All visible in their beautiful EPS and revenue charts. If we look 3 to 5 years from now, in my Mr. Invest sheet, you can see that the stock has the potential to surge 200% within the coming 3 years, which is all based on a mix of analyst forecasts and the company their own guidance. So the insider buy makes sense in my opinion. That's why it's also a big position in my portfolio. The second stock that insiders loaded the boat on is called Upstart Holdings. If you have been following my channel, you know that I have been banging my fist on the table for this one. The stock is now down more than 65% from its all-time highs, while all the fundamentals for this company are improving. And the director and CEO noticed this and bought in total more than $6 million worth of shares, reported on May the 7th and on May 12th at an average price of $28. The stock trades now at exactly the same price. This is a massive amount of money for an insider to commit. On top of that, the company also disclosed a $100 million share repurchase program around the same time. For me, this is also one of my largest positions in my portfolio because they are trading at a PE ratio of 62, which sounds expensive, but not if you are forecasted to grow your revenues by 35% and your EPS 63%. This is also visible in their EPS chart and revenue chart. And if we look 3 to 5 years from now, it's showing us that the company has the potential to be a $130 stock, which would be a 350% increase within the coming 3 years, all thanks to their high margins. Before we head over to the next stock, do me one favor and smash the like button if you appreciate the work and research I put into these videos. Alright, the next stock that insiders are buying is a stock I just added to my portfolio, and it's called HubSpot. This is a software stock that got absolutely slaughtered the last 365 days. It's now down 75% from its all-time highs. The CEO, CTO, and director all saw this as an opportunity and bought together more than $2.5 million worth of shares at an average price of $190 on May the 12th and on May the 11th. This was a coordinated buying spree from the top of the organization. They are trading at a price to sales ratio of 3, which is pretty cheap if you are forecasting that your revenues will increase by 18% and your EPS 37%, which is visible in their EPS chart and revenue chart, that just going up and to the right. In my Mr. Invest sheet, I'm forecasting that the company has the potential to be a $560 by the end of 2028, which would be a 170% increase from these prices. For access to my sheet, you got to go to this chat in my Discord server, and over there you will find a link to it. It's completely free for now. Next stock that insiders bought very recently is another stock I own and cover on the channel, and it's called HROW. This is one of the 5 healthcare and biotech stocks I own. The others are Zevra Therapeutics, Alvo, Immunity Bio, and Liquidia. I'm already up big on these two and sold half of my position, but I do believe HROW, Zevra Therapeutics, and Alvo are next. The stock is now down almost 50% from its all-time highs. The CEO and CFO saw this as an opportunity and bought together $400,000 worth of shares at an average price of $28 on May the 7th and on the 14th of May. Both the CEO and CFO buying simultaneously. That's not a coincidence. That's conviction. Wall Street is also bullish on this stock, with 8 analysts forecasting on average a 120% upside from current levels, but they don't have the balls to act on it. In my Mr. Invest sheet, I'm also forecasting that the company has the potential to be a $72 stock by the end of 2026 and a $150 stock by the end of 2028. HROW is the kind of stock that flies under the radar. until it doesn't. Now next up we got General Atlantic, which is a venture capital firm, buying a shocking $177 million worth of shares between the 9th of March and May the 14th. And the stock they bought is called ALKT Technology. This is an other software stock that got absolutely murdered in the last year. It's now down more than 60% from its all-time highs. It's right now trading at a price to sales ratio of 3.7. Analysts see on average an upside potential of 27%, backed by a forecasted revenue increase of 14% and a forecasted EPS increase of 125% within the coming 12 months. And the company just authorized a $100 million share repurchase program, signaling management thinks the stock is cheap too. In my Mr. Invest sheet, I'm forecasting that the company has the potential to be a $45 stock by the end of 2028, which would be a 160% increase from these prices. But important to mention is that software stocks could be dead money for the coming 6 to 12 months because of the AI fears. But if these companies come and report their forecasted numbers, Wall Street will eventually hop back in. Now next up we got GeneDx, and they playing a long game. And it's one of the most important long games in all of healthcare. And director Keith Meister thinks the same and bought a shocking $74 million worth of shares between March the 3rd and May the 15th. This is a shocking amount to deploy for an insider. That means he likely knows something that Wall Street isn't aware of. The stock was a $160 stock at their all-time highs, but it's now trading at $40. It's right now trading at a price to sales ratio of 2.7. Analysts see on average an upside potential of 80%. But if we look a little bit further into the future, you will see in my Mr. Invest sheet that I'm forecasting that the company has the potential to be a $54 stock by the end of 2028, which would be a 200% increase from current prices. But if you look at price to sales ratios, the stock could go up between 300% and 600% if you give the stock a price to sales ratio between 3 and 5, which isn't unrealistic. Dilution shouldn't be a problem in the coming year or two, because they got $170 million in cash and cash equivalents, which is more than enough to continue for some time. And that brings us to the next stock that insiders bought like crazy. And that one is called ONON Holdings, the Swiss sneaker brand that's quietly becoming one of the most exciting growth stories in the consumer sector. You might have heard of these shoes. They are already pretty popular in the US and Europe, but they are now also growing fast in China. In one day, on the 14th of May, 3 directors and CEOs bought in total $6.5 million worth of shares at a price of $36. The stock is now trading at basically the same price of $38, down 30% from its all-time highs, while the fundamentals are only getting stronger. They are trading at a PE ratio of 40, but that's fair because they are expected to grow their revenues 18% and their EPS a shocking 470%. This is visible in their beautiful EPS chart and revenue chart, which is going to the moon. 20 analysts have it at strong buy on average. And in my Mr. Invest sheet, I'm forecasting that the company has the potential to be an $80 stock by the end of 2028, which would be a 110% increase from current prices. Nike is struggling, Adidas is trying to find itself, and ON is quietly picking up market share. And now I would suggest watching this video, which covers some stocks with insane potential. But first smash that like button for me, I would really appreciate that.